What's going on, everyone? We're going to take a look at Tesla's weekly chart. We're going to talk about when is the best potential time to maybe start dollar cost averaging in if you have not already, where you should maybe think about starting a swing position or a long-term hold or even just a quick day trade. Now, again, I am not a financial advisor. I am a stocks and options along with futures trader. Been doing it full time for about 10 years, trading altogether for about 13 years. What I'm going to take a look at is technical analysis, some moving averages, some prior areas of supply and demand to kind of figure out where potentially this could be a good opportunity. Now, if we look at Tesla's chart today, we were down another almost 5% on the day, closing at a price of $237, and now after hours trading down about $1 from that. What I'm looking at here is a very, very weak chart. Obviously, we're down over 50% from all-time highs of $488. So is this a good time to start dollar cost averaging in? Sure. If you've already got a longer term position and you're just looking to accumulate more shares, accumulate a bigger position, it's always a good time to dollar cost average at around your weekly 50 SMA, your weekly 200 SMA. And obviously, if we get down below that, which we are currently below our weekly 200 SMA, the next and ultimate spot, and again, I don't know if we're going to get there, but the best spot that if you can get an opportunity to dollar cost average in on Tesla between $170 and $180, okay? That's going to take you all the way back here over a year's time, okay? Over a year's time to about prices of 143 to 184 in this zone. This is where we kind of found the bottoming out here. And again, it was, 422. And then we kind of reclaimed some area, and then we put in this high, and then we pulled back, and then we absolutely exploded. So if you can definitely get something between, let's actually open that up a little bit. If we can get something between 155 and 175, good spot for long term. Okay. Shorter term wise, you still have potential to go down. So if we start to take out last week's lows and we're looking at a price of around 217, you're going to have a little bit of an opportunity to short this down. Okay, because below 217, 215, you got room to come down to 275. That can definitely be like a capitulation. Everyone's throwing in the white flag, and that's it, right? They want nothing more to do with Tesla. So there's a short-term position there. In terms of a dead cat bounce, we're not really seeing it yet on Tesla, although last week's weekly candle did close and try to close right at that 200, but today we kind of gapped down and we opened up just a little bit below that, and we failed to take out Friday's high or last week's high. What I would realistically like to see is a closure back over the 200-day moving average to kind of let us know that short-term wise, the selling is over, that this is the low, right? Because right now, you have not seen a green week on Tesla going all the way back to February the 3rd. Okay, so we're looking at 1, 2, 3, 4, 5, 6 consecutive red week closes on Tesla. Now, if you look at the daily chart and you try to get a little bit of a better perspective here of what's going on, we're trading well below our 200 simple moving average, well below our 50 period moving average. The trend is obviously bearish. It's in its own bear market, Tesla being 50% down from the all-time highs. You are looking at a little bit of a dead cat bounce. However, I do want to point out to you that on a daily time frame, you are setting up a bear flag. So if you continue to kind of daily dead cat bounce into a price of, let's say, 270, 280, I would look for a rejection there, see if we're going to actually break this downtrend, or we're going to kind of quickly wick above it and then pull back down. If we do wick above 285 and fail to close over 285 and we close back under, you could be looking at this bear flag break to the downside, and that's when we're going to be targeting those prices of 215, and anything below 215, 185, 195, 175 could be some price targets down to the downside. Again, it's all going to really be dependent on what's going on macro wise. If they do get these rate cuts, if we start to see some easing with this trade war that's going on, there's a few other key indicators that you need to keep your ear to the ground on and see what's changing. We need to see a little bit more easing here in the overall markets and with the Fed in general. Again, personally, for me, I think that Tesla's still got a little bit more room down to go. I think that if you're a day trader, you can definitely try to dead cat bounce this Anything over, let's call it $252, I would be looking and trying to screen for prices of 265, if not up to 280, and then I would want to lock in those gains. That's short term. Longer term, the next, let's call it the next 45 to 90 days, if we fail to get over 280, I think we see lower prices. Again, we don't even have to get to 280 to see lower prices. We can definitely get rejected in between 250 and 260. But what I'm looking at here is if we start to take out 217, we're going to go down another 20 to 30 bucks. Okay. So that's an area of opportunity. Even if you have a long position, you can definitely look to short, maybe even place some options contracts, maybe 3 weeks out, 4 weeks out, and try to capitalize on that quick cash flow to compensate for the portfolio going down, if that makes sense. Again, just wanted to give my take on Tesla and where I see it. If you guys want to trade with me each and every single day long, I do day trade stocks as well as futures. I trade the NASDAQ 100. You can join Evolution Traders. The link is down in the description box below. I'll see all of you guys on the next video. Stay safe out there, guys. Make sure to hit the thumbs up button on your way out, and I'll catch you guys all later.